Ladies and gentlemen, let's get show on the road. We have 5 minutes until we start. Are you not entertained? Is the market not spicy enough for you? It's busy. It's busy, isn't it? A lot going on. We've got NASDAQ 4 days of sell-off now, or 3 real days of sell-off. Dow doing its best to hold the fort. S&P down, gold getting chopped, Bitcoin smashed. Of course, that's affecting MSTR. Tesla's dipped under 300 today. Weaker than expected. Well, the Nasdaq's hurting it, and some news on that. Yeah, it's a busy day. Coinbase obviously stinging. Nvidia wait for that. Tesla talks about that. Walmart did okay. Zoom's getting battered. SMCI, of course. What else have we got? Some of those nuclear power stocks are down heavy. Anyway, it's wild out there. This is a perfect day to be talking about this. This is either going to be really busy, and you guys are all on here, got one on the markets, or everyone's had enough of the markets. They're tired of staring at the screens. So don't worry. If you're registered, you will get a copy of the recording. If you're listening to this, you've already got a copy. So I don't know why I'm saying don't worry. Anyway, we'll get started in a few moments, ladies and gents. It's a spicy day. The NASDAQ has reclaimed its VWAP just about. Crude oil is battered. Gold. That'll be interesting to see how gold resolves itself, won't it? IWM has just been awful for a while. Do you know what's interesting? The NASDAQ just dipped under the yearly close in print. The yearly close in print on the let me just switch to the futures contract, the CFD contract, should I say? Yeah, the close on that was, you can look at your own charts. The close on that was 2-1. No, it wasn't. It was. Of course, it wasn't. It was 20,974, 975, give or take, and we just dipped under that today. So we are positive on the year, just about, but we weren't at one point. Okay, I will get started in a moment, ladies and gentlemen. We're just going to start at 6 o'clock on the button. Don't worry, we're going to talk about a topic. The topic is a good one. I know many people have been asking for this one, and I'm glad to be able to talk about it. And it's a shame that we're so active today. It's a shame that we're so active today, because I think that maybe people missing this webinar who otherwise would have got a lot of benefit from it. But maybe you're positioned and you're kind of like, you know what will be is helping me not over meddle with trades or deviate from my plan. And you know what as well? Just a comment on the volatility. If this is not part of your plan, if you specialize in normal conditions, then you stand aside with this. It's absolutely fine to do that. And very often traders feel like just because there's volatility, I'm missing out on so much opportunity, I should be killing it. I'm a trader. Of course I should. Not necessarily. Like if you're a specialist in a certain strategy, a certain play, a circuit market regime, this is a very different market regime. This is unlike anything we've had for a long period of time. So unless you've seen this before and unless you have a playbook for this, it's perfectly okay. And in fact, probably the right thing to do to step aside, keep the powder dry for an opportunity that is more aligned with your strategy and your playbook. There are two groups of traders. There are traders who are good at this environment because they've traded this environment before. They understand how this kind of flush and how these exhaustions and how these kind of mini bear markets, if you like, play out. They have a playbook for it. And there are others who say, you know what, this is not my thing. I'm not going to trade this. I guess there's a third group who get sucked into it and trade that. If that's you, then, and I'm going off piece here with the topic, but maybe you can kind of calm down today and say, you know what, if this happens again, how do I want to play it? Do I want to get involved? Do I want to just make sure I've got very minimal risk on the table? Do I want to reduce my position size massively? Do I want to plan the trades out? It's probably a topic for another day, but as the market is moving and is aggressive today, it's worth kind of mentioning. Okay, we'll get started now, ladies and gentlemen. Okay, so how this will work is I'll introduce myself in a moment, so bear with me. I do apologize if you've not seen me before. Many of you have. We will run for about 45 minutes and some Q&A at the end, and we'll try to do that as a chat. There's a Q&A button somewhere. You'll find it. I'm sure you work around on trading platform. You can work your way around Zoom. Okay, so we shall start now. Overcoming today is the last in the series of this series. At the end, I'll tell you the next series we've got, which I think is going to really kind of like help as an additional add-on to what we've talked about the last few webinars. If you're new to this webinar, then you can get access to the prior recordings. I believe Pepperstone will give you access to those. We're on a mindset journey this month. We've been talking about kind of discipline, about keeping ourselves dialed in, and just really dealing with some of the challenges that come with trading. Over trading today, we're going to talk about something slightly different, but all these type of things, doesn't matter how effective your strategy is, discipline and keeping to the plan and sticking to the rules is so important. Now, next month, I will give you the kind of topics that we talk about next month, but as a bit of a teaser, we are going to dig into developing a strategy that suits you. We're going to dig into how to kind of be flexible, but not too rigid. So disciplined, yes, but able to adapt to the subtle gray area the market sometimes offers. Anyway, getting ahead of myself. Today, talking about overcoming self-doubt and trusting your strategy. Mark Douglas, who wrote Trading the Zone, that one? No. That one, Trading the Zone. If you don't trust your strategy, you always find a reason to second guess your trades. Confidence comes from execution, not hesitation. Something that's super important to think about. And actually, one of the things that Douglas says, and by the way, those of you know me, I like Trading in the Zone, but I think it's not my favorite book, and that's a rarity. I know it's a crowd pleaser and everyone likes it. There's a lot of good stuff in there, don't get me wrong. And Mark Douglas was an excellent trading psychologist. I think there's better books out there, like Steve Ward's books, like Brett Steenbarger's books. But hey, Douglas got some great quotes, taking nothing away from it. Worth a read, absolutely worth a read. So before we get started, actually, no, let's tell you what are we going to learn today? What we're going to do. So we're going to talk about why self-doubt creeps into trading and how to stop it. This decision framework I developed for you to help trust your trades and execute those trades with conviction, how those past mistakes often, really get into your head and it kind of sits there and you end up impacting how you trade now and in the future. This 5-second rule to help you eliminate hesitation, and how to balance this discipline and flexibility in your trading decisions. It's a really interesting topic, that one. So really, if you struggle to stick to a plan, not necessarily from a discipline perspective, but if you're an overthinker and you have decision, not fatigue, well, that's part of it. Actually, we'll talk about that in a moment. But if you kind of try and second guess things, you just think, I just want one more thing to come into line. Should I, shouldn't I? Do I want to pull the trigger or not? We're going to go what I call upstream and work out why this happens. Because the standard answer is, well, just don't hesitate, just pull your trigger. If you see your rules, pull your trigger. But yeah, easier said than done. Real world is that we have this subconscious that tells us different stories. And what we want to try and do is unpack why we think the way we do, whether it is hesitation, whether it is overthinking, whether it is breaking rules, whatever it might be, and work out a fix for it so we don't get it in the heat of the moment. Now, I've got some tools for you that I'll share that will help you in the heat of the moment, stick to the plan and execute. But we kind of want to do more than that. It's like the analogy of, okay, well, I used the analogy last week. You're on a diet, like in the heat of the moment, if you can just restrict and not eat the pizza, that's great. But you can do easy things by not getting the pizza in the house, not having the cupboard full of chocolate if you're on a diet, or not having cans of beer ready and chilled if you're trying to avoid drinking beer. You get the point. There's stuff you can do in trading. Obviously, that's a simplistic analogy, but in trading, there's stuff you can do to help it. So in the heat of the moment, you're not just relying on willpower and discipline, because that will fail you at some point. You are a human being, right? We can never be perfect. And so we want to have operations and systems that support us and hold us as a safety net. I think James Clear said this, you fall to the level of your systems as opposed to your habits and your discipline, level of your habits and systems, rather than relying on discipline and motivation all the time. You can't do that. You have to have some sort of framework in place that helps you get over these hurdles. And of course, discipline is important, motivation is important. Those things are useful and valuable. We need them, and confidence. Talk about the confidence bank, but we need to kind of go a little bit further back, take a step back and look at what's causing the hesitation, what's causing the overthinking. Because, to be frank, you can have the best strategy in the world, but if you second guess it, overthink it, don't pull the trigger, it's meaningless and it's got to be fixed. And if it's you, by the way, whether that is a discipline issue, whether you're overthinker, whether you hesitate, all these things, fix that first before you start digging into your strategy. That is the one thing to focus on more than anything else. Okay, so I need to mention, ladies and gents, of course, you know this already, but I must say this, and I say it with good reason. Trading, if you're trading spread betting, CFDs, these are complex instruments, and trading with leverage means you have a high risk of losing money. It works great when it's working well and you're long and you're leveraged up. and very, very nice. But if you're long, you leveraged up, the market's going lower, it stings, it hurts. Understand that's the trade-off we're taking. And so when you're trading with leverage, recognize that it is a double-edged sword. When it works, great, and you're making good, profitable trades, fantastic. But things can get nasty very, very quickly. So please, please understand the risk you're taking. If you're a new trader, just double check, read through, go on a demo, do all that other things. And when you understand the risks, when you're comfortable, when you think it's for you, and you've kind of done all your research, then fine, start small, do stuff that you're comfortable with capital that you can afford to trade with. So yeah, I know we say it all the time, but it is so important, guys. It's very, very important. If you know all that and you tick the box and you go, yeah, I'm prepared to get involved, I understand the risks, then let's go. Okay, so reminder, if you have I not introduced myself, I do apologize. My name is Mark Holstead. I have been trading for a while. Started in 2001, so I've got some decent experience in the markets. I've traded through all sorts of different market environments, but I also in a unique position as I run a community called Traders Mastermind. I see traders coming up through the ranks. I see traders dropping off. I see traders making it to a really good level. So not only of my perspective and my experience, but I also see how others deal with challenges as well. So I can share stuff that I think is effective from my journey, but I can also share things that I've seen others do that maybe I wouldn't have thought of or wasn't my experience, and say, I've seen traders do this, you could try that. So that's why I try and do these webinars, is collect stuff that I think is valuable, but also stuff that I see other people doing that might help you, that maybe wasn't part of my journey. And I've got a podcast as well, and I talk to developing traders, and people really like that style. When I talk to traders who have kind of come up through the ranks, maybe they're not many years ahead, like decades ahead, and kind of top level, if you like, of experience, but there may be just a few steps ahead of where you are if you're a developing trader, so you can learn from those. So anyway, that's my objective. I share stuff with you that hopefully will be valuable with you, and I think I'm in a pretty unique position to do that. So, but always do your own analysis, research, homework before you implement anything. We're not talking about strategy today per se, but we are talking about how to deal with risk, which is a very, very important decision to make. And it's a very personal thing. Things take time. And as I always say, if you're going to make a change to your trading plan, your process, make the change, make the course correction, observe the results, and then make another. Don't keep kind of changing and changing. One of the errors and challenges that many traders do that I see is constantly making adjustments. You never know what works, right? You get all fired up. You say, I'm going to do this, I'm going to do that, I'm going to change this, change the other. You put it into place, it doesn't work out, and you go, oh, I'm going to change it again. You got to give it time. You got to give it time. Most people know that, but I just wanted to make it clear. Okay, so let's get straight into it, guys. That is a long enough introduction. I hope you're going to find value from this. Please, if you have any questions, you are welcome to stick them in the chat. You're welcome to stick them in the Q&A, and I will absolutely get to every single question at the end. And if I can't help you, I probably will. But if I can't, I will direct you to someone or somewhere that will be able to help you. Okay, so let's get rolling. The confidence execution loop. We talked last week and the week before, actually, about confidence because it's so important. But the issue here is if you hesitate, and we've all done it, right? I've made every error in the book, made every mistake in the book. I don't stand here going, I'm the perfect trader, I know everything, listen to me. Absolutely not. I do not have all the answers. I've made all the mistakes you have. And that's just the way that it goes in trading. You will make mistakes, you will make errors. So don't think any less of yourself for making these errors and going, I remember looking myself in the mirror kind of 2006, whatever it is, 2007, going, why can I just not stick to the rules? Why am I not pulling the trigger? What's wrong with me? Am I the only idiot who's doing this? No. I promise you, you're not. And I promise you it's okay. And I also say that you can get over this hurdle. If it's you hesitating, you have that confidence execution cycle, it's just not helping, then, it can be sorted, it can be fixed. So when you hesitate, you lose confidence, you get more hesitation. It's that vicious cycle, as the same with a lot of trading. If you break your rules, you go on tilt, you get frustrated, you get FOMO, you go on tilt, it can spiral out of control. So our job is to try to break this cycle and preferably not get into the cycle in the first place. Now, I'm not going to promise you that after this webinar, you're going to go away going, I never hesitate again. I'm a genius. I take every trade with clarity. But if we can make a little incremental improvement, if you could just reduce the hesitation next week a little bit more, the overthinking goes, then you get to a point where further down the line, it's very, very few. Now, You will still make mistakes. You are a human being. You might hesitate on a deal now and then. You might overthink it, but it won't become a challenging problem that really devastates your equity curve. It's something that is there. You're human. You make a clerical error. You do this, you do that. That's life. That's trading. And it doesn't need to be perfect. I think I said last week or the week before, I watched an interview with a hedge fund manager, a famous hedge fund. I always think of this and I never remember who the goddamn guy is. Anyway, super famous trader. You guys would know him. And he was talking about, I always exit too early. I always, all these mistakes that we make as retail traders, like this damn guy's managing billions and he's making mistakes. So don't worry about making mistakes. We just want to reduce them so they're not doing too much damage. And we don't want to kind of build this self-doubt. Notice a difference in language and terminal and the kind of tonality with the traders who are more experienced. Let's use the hedge fund manager as an example, right? He says, I make mistakes, but it doesn't dent his self-doubt. He just accepts it and says, that's not an issue. Now, I appreciate that when you get more experience as a trader, you can look back at your P&L and go, well, that's where my confidence comes from. And I understand that. I appreciate that. A lot of traders go, well, Mark. I've got nothing to build my confidence on. And we've discussed this before. And I understand that. I appreciate that it's far easier when you've got some results to look at that you go, hey, but you will have had spells of good trading, even if you're kind of currently down or currently in drawdown, whatever it might be. You'd have spells where you've done stuff correct. And what we're trying to do is we're trying to disconnect your value as a trader from your equity curve, right? I know that everyone marks that, and obviously that's why we're in this game and why we're doing it. But if you can disconnect yourself from that, and your identity is not your last trade, it's not your equity curve, it's your process, it's the way you approach trading, your discipline, the way you execute your methodology. That's much calmer way to trade. And honestly, guys, even when you're super experienced and hopefully you're doing very well and everything's going great, you still don't want to attach your value and self-worth to your equity curve, because 1 month of drawdown, a couple of bad trades, and your mood is like this, and you're not a nice guy to be around. No one wants to be around you, a trader who's attached his net worth, not net worth, his self-worth, his mood to your equity curve. You want to be able to say, hey, you know what, the equity will sort itself out. I just need to execute with confidence, clarity, focus, not doubt myself too much, and not going to let my confidence get too damaged. And by the way, I know I'm laboring this point, but we're human beings. Forgive yourself a bit. The thing is, we're all type A's here. We're all driven. Trading attracts that. You want to move forward. Maybe you've had success in other areas of your life. You got a busy job, you're a family guy, whatever it might be. But the point is that it doesn't have to be perfect. It will always be imperfect. So you'll never hit perfection. So don't beat yourself up too much. Yes, there's some areas you want to focus on and remove from your trading because they devastate any account, and that needs to be eliminated and sorted. And you can solve that. If you focus on something, the human brain is good. If it focuses on one thing and relentlessly pursues that, it can fix it. The trouble with trading is we're attracted to everything. There's so many levers and dials to adjust. We're trying to do the strategy. We're trying to run a trade. We're trying to add more size, trying to add to the trade. We're trying to take this, we're trying to do that, trying to do the other. And actually, the one thing that needs fixing is the big red flashing light right in the dashboard that says, your discipline sucks, sort it. But if you can really focus your mind, try little different tactics, then you can get it sorted. Okay, I feel like I've been ranting away here. Let's keep moving. Execution is the most important thing, and confidence is built by taking the correct action. We don't want to be hesitating. So just remember, you don't want to be feeding that beast. You don't want to be feeding that loop. Okay, I'm just going to double check. All right, fine. You guys keep putting the questions in. That's fine. I'm just making sure that no one was saying, you're muted, I can't see the screen. That would be bad. I do double check this stuff, and we haven't done it as yet, but yeah, fine. So I'll just have a little glance over there. Okay, so where does self-doubt come from? Let's think about this from a real logical perspective. It's not just about losing trades. Sure, if you're in a losing streak, that doesn't help. I get it, right? I can stand here and say, well, don't worry about losing streak. You're a trader. That's why you're in this game. You're in it to make winning trades. And so when you don't make winning trades, the raw data says, I don't feel very good about myself. But as I said before, if you can disconnect yourself from that, it becomes more freeing. And what happens is you start to attract value and status from the way you approach trading, the methodology, the way you dial yourself in, prepare all that kind of stuff. And then the P&L, you kind of let it take care of itself. So try to think about it like that and say, it's not just losing trades. I want to build or remove the self-doubt, if you like, from not thinking about past mistakes. We've all made absolute clangers. We've all done stupid stuff. And maybe you think it was just an error, a bad trade. But most of the time, it's not that. No one really cares about a stop out. Most people care about doing something that is outside the plan, adding too much size, you know, doing something that just really, afterwards, like, why the hell did I do that? I didn't even know why I did that. But try not to dwell on that type of stuff. Overanalysis. So this is something we're going to focus on in a moment. I'll give you some tips for this and ideas. We have so much information coming in. We've got this market, that market. We've got news. We've got indicators. We've got our own P&L. We've got other stuff going. It's absolute chaos, right? And the best traders simplify. They go, yeah, you know what? That might be valuable. That might be useful, but I don't need that. I just need these things. I need price. I need volume. I need whatever. And I don't say I'm not against indicators at all. And I'm not saying here this is not an indicator thing of beating indicators up at all, but just generally, like focus your mind, focus your energy, one or two markets, one or two strategies, one or two indicators if you must, or just price levels. Some people have loads of those levels. Like, how do you know which level is going to hold? One or two levels. Really simplify stuff down so that you don't have all this information coming in because you're looking, going, oh, I want to buy it. But actually, this indicator saying that market's saying this, and you just that is going to give you anxiety, and you are going to overthink it because you have been bombarded with information. You're trying to assess what each of these pieces means to the decision you're about to make. Is it valid? And of course, you're going to second guess it. And if you have self-doubt initially, then you're going to find a reason not to take the trade. You know what? I would take this long here under the low here, but if I look over at gold, it's doing this, or if I look at this, it's doing that. You need to simplify stuff so that you're just focused on doing the job, executing the job, and it comes back to that plan and simplifying the plan, right? All these things often have a general theme, whether we are talking about discipline breaks, FOMO, revenge trading, all the stuff we've talked about before. It all has the same theme of just simplify the process, have a process, and keep it as simple and as focused as possible. And the other thing is, a lot of traders fear being wrong. Now, this is I'll admit, this is a very tough thing to sort out, but it's doable, right? Because as human beings, you stick your hand up. Yes, Holstead, what's the answer to this maths question? 4. Wrong. You're an idiot. Next, oh, Smith, you got it right. Holstead's the idiots. We're all brought up at school to fear being wrong, right? We don't want to stick our hand up and be wrong. But actually being wrong is absolutely part of the game in trading. And there's so many people as well who are looking for these high probability win rates, high probability strategies, high win rates, should I say, and at the expense perhaps of more P&L. Now, I'm not saying that that's a bad thing. You find your comfort zone in terms of win rate, and this is probably another topic, but really removing the fear of being wrong. You will be wrong. You will lose money in trading. That's the way it is. You will have losses. And it is almost not being wrong. It's like you just took the trade. That trade didn't give you what you wanted. That's okay, because the edge plays out over a number of trades, hundreds of trades, thousands of trades, whatever trades is. As Douglas says, you are the casino. You're not worried about some guy coming in and winning 100 grand one day, because actually over time I've got edge and it's going to play out. And I recognize it's not as simple as that, so we don't know for certain we have edge. If you are a casino operating a slots game, you have edge. Or operating blackjack, you have edge. But in trading, we're trying to develop a system and strategy that we believe has edge, that if we execute enough times, it's going to work out. So there's no reason to fear being wrong. You think about, again, the analogy of that casino. Is the guy owning the thing, looking at the guy at the high roller table, the gambler at the high roller table, going, "Oh God, he's got blackjack. Oh no, we weren't wrong." No, he's not. He doesn't care. And I appreciate I'm simplifying things a little bit here, but it's a common thing that holds a lot of traders back, worrying about being wrong. Here's a little tip, actually. I don't like using that word because it's overused, but there's a good trader using Traders Mastermind, Scottish John. His name is, we call him. He's from, believe it or not, Scotland, and he came up with something to kind of help him structure his trades and not worry about each individual trade. And that's to chunk trades into groups of 10. So he would take 10 trades and he wouldn't worry about the outcome of each. At the end of the 10, he would then audit and say, how are those 10? And so he didn't worry about if the trade was a loser, trade was a loser, trade was a loser. He was just waiting to do 10 so we could audit them. Now, that's his own style and his own way. Maybe you could do it weekly. Maybe you could do it monthly. And don't worry about analyzing your performance after each trade because it's meaningless. It's just a stamp in the equity curve that has no meaning, right? Yes, review it. Yes, learn from it. Of course, that's the way to do it. But ultimately, try to disconnect the way you feel about each individual trade. That will help you so, so much. If you don't worry about the trade, if you're not concerned about it, it's so much better. And Steve Ward said it on a podcast. He came on as a guest on my podcast. Well, it's got to be a year ago now, but he said, get comfortable with being uncomfortable. And it's such a great phrase because you have to be uncomfortable. There's no certainty. And the fact that we have uncertainty, I write a daily email, and this is one of the emails I wrote actually, is we have to embrace it because that's where the reward is. If you want certainty, you stick your money in a high yield savings account, you get your 4%. Fine, that's certain, right? Unless the bank goes bust, which is protected by the government. But you get the point. The tail risk is almost zero. But if you want to have that extra alpha, if you're trying to get a better return, if you're trying to get more return for your money, you have to take more risk. And so trading is super high risk. And so there's a lot of uncertainty. And that's why it's priced the way it is, because often, you don't know what's going to happen. There's a high risk, it's uncertain, but then the high reward comes with that. Potential high reward comes with that. And so we have to embrace that. If we don't like it, we shouldn't really be in the game. If we're okay with it, then we need to go, that's why I'm playing the game. That's why I'm trading, because I accept there's a lot of uncertainty here. And that's why the kind of upside is so high, because the uncertainty is so big. I'm trading off one for the other. If I want certainty, I've got plenty of things I can do in place of it. And that's fine, because if that helps you sleep at night, you do that. So something to think about is recognize where your self-doubt starts. Is it past mistakes? Is it you're overanalyzing? That's probably where you are. You're probably overanalyzing stuff and fear of being wrong. Oh, I don't wish to be a loser. Oh, that make me feel bad. And by the way, I know I'm dwelling on this point a little bit much, but it's worth it. Often, here's the conversation in your mind. You're about to click the button, about to click trade. It sets up. You're like, yeah, right, I'm going to buy that trade. You hover. You go. A little voice just goes, yeah, that might be a loser. You go, it doesn't matter. Yeah, but you've not done so well this past week, have you? You're in a bit of drawdown. In fact, you've not done very well this past month, have you? You don't want to add to it. You know how bad you feel after a loser. Do you really want to take it? And it's that voice that's trying to protect you. It's just doing its job, right? It's human nature, because you feel bad after a loser. And so it just says, you don't want to feel bad. Don't take the trade. You won't feel bad. Don't take the trade. And this is where you kind of have this fear of worry. We have the connection of, hey, my last trade, my recent performance is my value. And that, if you can disconnect that, as I said, then it doesn't have a hold on you, because you go, I don't care if I'm losing. I do not care. My risk is capped. I understand how much I'm risking on a trade. And that's my position size, my stop loss. Am I okay with that? Yeah. So what? I don't care what happens. And that's the nonchalant way you've got to approach it. Now, I know it sounds a bit blasé, and I appreciate that, but if you can disconnect worrying about the outcome of that individual trade, it puts you in such a position of power. Okay, really obvious example here, but we had this was yesterday. Was this yesterday? Overthinking leads to mistrade. Simple. Like, you've got a lot. I know it's used as an example, which gets recent. If you're looking to short the pullback to yesterday's low, it held and it rolled back over again. Pretty simple trade. If you've got loads of stuff on, again, I got nothing against indicators. You can look at this, look at that, look at the other, look at the lines, and it applies as well for levels. People got so many levels on. I was like, what's valuable? Well, yesterday's low is valuable. Yesterday's high is valuable. The close is valuable. Depending on what you're trading, the asset class you're trading, just do the levels that you know other people are looking at. You don't need any more information, because you're not going to be trading those levels, but you want to wait to do an area to do business that you look at and you go, yeah, you know what? If it pulls back to that level, I'll look at it, and then I'll look at price action. Then I'll decide to pull the trigger or not. You don't want, if in doubt, take it out. If in doubt, get rid of it. Now, if you like Bollinger Bands, you like Ichimoku, fine, but just focus on that one thing. Just say, hey, I want to take this when we break out of a Bollinger Band. We have a high ATR. We do blah, 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 whatever you have. That's okay. But don't then start adding in, well, I do want to check Bitcoin. I do want to just double check the ES. You just end up, but the reason we do this, by the way, and I've been there, done that, by the way, everyone's been there, done it probably, is you're trying to de-risk the deal. You're trying to say, well, if I just check that, if I just add this indicator, if I just, whatever the variable is, you think falsely, I believe, that that's going to de-risk the trade. You think, well, if that lines up and that lines up and that lines up, then that means it's going to be there's more light to trade. Now, don't mistake this for confluence, which is a price action pattern. It comes up to a level. Maybe that's a confluence with a moving average that you like to use, and that's a signal. Then fine, that's absolutely fine. But when you're trying to add things and look at different things and different variables to make a decision, then you're never going to win with that, because overanalyzing just makes you way less decisive. Way less decisive. So we'll talk about a three-step decision process to reduce information overload in a moment. First of all, let's talk about the psychology of trusting your strategy, right? You have to have a healthy acceptance and caution of risk, okay? But that should be different to doubt, because you don't know the outcome of individual trade. We know this. Sometimes we don't trade the way we want to trade, but that's the fact. We don't know the outcome. And anyone who tells you otherwise is not telling you the truth. Nobody knows the outcome of a trade, and we have to accept that. And we need to be cautious about risk, right? We need to look at it and say, okay, is that stop in a good position? This is slightly off piece, but worth going down the rabbit hole. We need to look and say, is that stop in a sensible position? Is the thesis reasonable? Is the target reasonable? And just that kind of just test. If the stop's a bit tight, get pinged out noise here. You know the stuff, and this is more of a strategy operational consideration. But we need to be cautious, and we need to be like, okay, this might not be the trade to take. Let me wait 5 minutes. Let me not get too aggressive with this. Versus the doubt of saying, oh, I just don't know. I don't know. You know you don't know, but we should pull the trigger anyway if it's part of the plan. And the brain always is looking for that certainty. And if you let it go off and seek certainty, it will look at the variables. It will look at the social sentiment score and the news and this value and that value and the higher time frame and this lower time frame. Let me check the 1 minute. Let me check the 89 tick. It tries to get some certainty where there is none. And the reason it does that, it craves it because it wants to be certain, because it's a self-protection mechanism. It doesn't want to feel bad from the loser. And so it tries to make the decision certain and say, hey, it's certain. And then there's a lot of uncertainty in life in general, but in trading, it's very amplified, of course, with money on the line. And we have to accept that. So, belief repetition in trading is important. So what I mean by this is just believing that you're doing the right thing. And this is the thing, right? You don't have to worry about, hey, is this trade going to be profitable? Is this day going to be profitable? Is this week going to be profitable? That's your ultimate goal, obviously, but you're trying to put together a string of trades that adhere to the plan that you can review, adjust, adapt, make a course correction on. You do a week and you say, that wasn't a very good week, but what did I learn from that week? Yes, I stuck to the plan. The plan's not that great this week. Do I need to make an adjustment? You know what I do? I need to be a little bit less aggressive. I don't need to wait for the close. I need to be a bit wider with the stop, whatever it is. And then you make another week and you do that. And you make these little adjustments. If your expectations are, I don't matter what the outcome is, I'm going to learn and move forward, that helps you stick to the process, stick to the plan, as opposed to worrying about the outcome of each individual trade. And one thing to think about is just to say, you know what is my trading plan? My trading plan's super simple. I'm going to stick to it. I'm not going to overthink it. I'm not going to second guess it. I'm not going to worry about pulling the trigger. I'm happy with the risk. Am I comfortable with the risk? Yes, I am. In which case, what am I waiting for? Why am I trying to be smart and be clever? This isn't scalable, this. I need to have the plan. And if the plan needs adjusting, so be it. I will see the data and I'll adjust. And I'll go version 1.1, 1.2, 1.3, 1.4, not over adjusting, but using that as data as opposed to flying all over the place. And well, that trade you took into account how gold was doing that day. That trade you took into account the 15-minute. Never look at the 15-minute. You get the point. It's very, very difficult to improve if you're constantly looking at stuff. So I want to share with you this decision, the decision framework for confident execution. So here's a nice process, and you want to simplify your process, right? And you don't use this, that's fine. You use your own. However you do, I'd like to see you simplify it into 4 steps, 5 max, right? You just ask yourself these simple questions. Is the trade part of my strategy? And I know it's simple, and I know people bang on about it, and I know every single trader who's traded more than twice in their life is telling you the same thing. But I promise you, this is just a simple thing that can help you. And if you get used to it, soon you will go, right, I want to take a trade, I want to take a trade, I want to take a trade. You know, it's not part of my strategy. And that first time you do it, you'll realize you've got control of your actions. You'll realize that the answer is no. And so you walk away. You go, that doesn't trick my strategy. It's just me thinking the market's going to do this. And that's not a way to trade. I'm not trading from the gut. I'm not shooting from the hip. That's not it. Like my ideas and my thoughts and the way that I trade go into my plan. Now, we'll talk more later and actually a lot more on it next month of how to be disciplined and focused and rule based versus adapting the conditions, because there's a fine line, right? If you want to be completely rule based, build an algo. You know, I believe that the edge of a human trader, a discretionary trader, is having a framework to work off and then having a chunk of discretion, which I believe, and this is my personal opinion, don't sound right, that over time as experience, that becomes wider as part of your decision. So your decision is that chunk there. When you're beginning out, you're developing trade, it should be rule-based, discretion, maybe even 100% rule-based to get over a discipline hurdle. But then as you become more experienced, you can make that discretion wider and wider and wider until the point where your rules are probably only risk rules. You won't do anything crazy in it because you know kind of what works for you. The rest of it becomes a discretionary based decision. So the first thing is, does my trade fit my strategy? If not, walk away. Easier said than done, but if you can practice it and you get a win from it, and the first time you do it, feel good about it and say, you know what, rather than having a negative connotation and saying, I didn't take the trade, it wasn't part of my strategy, I missed it. You go, you know what, I did the right thing. I did the thing that I want to do as I see myself as the trader next month, next year, whatever it might be. That trader walks away when he doesn't see his or her strategy. Number two, am I following my plan? Again, if no reset, that could be strategy. That could be stuff like risk. It could be stuff like, am I taking other information? If we're talking about hesitation, overthinking, am I looking at other information, pieces of information that's not serving me? Stop. I don't need to do that. Reset. Have I got my stop loss in place? Have I got my target in place? And target, by the way, could be hold to the end of the day. Doesn't have necessarily have to be a price target. You might be like, well, I just want to see where it goes. We'll give it an hour then. Have some way of framing it and say, there's my stop loss. Here's my risk. I want to hold this for an hour and see how it plays out. And then I'm going to readjust and reset and manage the trade. So time-based target is fine as well. And I personally, I quite like that. But if you use an actual numerical target, price target, then that's cool. It's fine as well. Am I hesitating? If you're hesitating, I've got a 5-second rule for you that will help. And that's in a moment. But before we kind of move on to the actionable stuff, I just want to talk about this. Past mistakes really influence future trades. And, I said this at the beginning, and it's important to repeat that you must disconnect yourself from it. You must try and say, these trades don't define me. My last trades don't define me. And it works both positive and negative. You've been in a way where you've made a great trade. You think you're trading God. I've been there. I've been to any of these things. You think, I can't do no wrong. You end up giving a load back. You're like, oh, damn it. The market can smell that. It's got a special room for those people. It says, oh, sir, are you feeling quite bullish about your equity curve? Do you think you have what it takes to kind of really take, can you do no wrong? And you go, yeah, I've made massive amount of money in my last couple of trades. He goes, oh, step this way and took the velvet rope for you. There's a special room for traders like you. Or you're like, yeah, of course there is. And you go, bang, trap door, you lose those trades and you end up oversizing and you go, oh God, I'm not actually a genius. I need to take the wins and appreciate them and respect them. So thank you very much. But it doesn't mean I've cracked the nut. So there's that side. And of course, the losing side of letting those losses really impact you and think, oh, and by the way, there is if you're really, really, really impacted by stuff, it's okay to walk away and have a break. No trader has ever said, I regret taking a break. Take a break, let your brain kind of process all the stuff that's gone on. Remind yourself daily, hey, this doesn't influence this shouldn't impact how I feel about trading. If you need to do that, do that. But just remember that does have a subconscious impact on your trading. And it's self-protection. It's like, I don't want to feel that way again. I didn't like the way I felt about the losses. So I'm just going to, trade's gone. You're like, damn it. So you just don't want to have that impacting you. You don't want that subconscious hesitation, especially if you're on a lower time frame, right? If you're on a higher, and by the way, this is kind of something that if you are struggling with this and maybe you try some of these things and they don't work, it's something to step up the time frames a bit. Give yourself more time to make the decision. It's not going to fix things overnight, but it might help you just realize what you're thinking and audit your thoughts. Because if you audit your thoughts when you're working on the higher time frame, you've got time to do that. You're saying, well, why am I overthinking this? If you're on the 1 minute time frame, you're scalping, you've got no time for that. You have to act or you miss the trade. The opportunity's there, it's done, it's gone. So there is another thing of saying, okay, well, stretch the time frame out a bit. It doesn't have to be where you end up as a trader permanently. You can always come back again, but maybe just give yourself more time to take the decisions. And that helps you think about what you're thinking about. That makes sense. And you can look and say, why do I think that? And really analyze in detail what those thoughts are that are flashing through your brain. So the fix to think about this is it's to really try and reset after each trade. So the trade reset rule. So after each trade, you go, that trade is done, draw a line under it. Next trade is a completely independent event. Has no bearing on what I've done before. It's irrelevant. It must stand up on its own 2 feet. I'm not on a hot streak. I'm not any of this. I'm not checking the gambler's mentality. I just need to look at it objectively and analyze it and say, is it part of my trading plan or is it not? Okay, so this comes to this 5-second rule. We talked about this 2 slides ago. Now we get to the kind of actionable tactic that can help. So this can really help you eliminate hesitation and pull the trigger. So assuming there's a few assumptions here first, so let's just clarify this. Assuming you have the setup in front of you, we're not talking about shooting from the hip here or trading on a hunch. No. Assuming you have your filters met, your triggers met, if that's the way you like to trade. I like to do that personally. I have a filter and trigger process, and you see the setup. If you find yourself hesitating, you find yourself looking at other decisions to take, start a countdown. 5, 4, 3, 2, 1, click. Once you start that countdown, you have to act. And what this does is it creates one extra layer before pulling the trigger. So by the way, this trade has to be valid, has to meet your rules. Everything has to be fine from a trading plan perspective. Assume you've got a trading plan, you've got the setup, all this stuff, assumptions there. The risk is capped. You're happy with the trade. Target, stop. This is ready to take the trade. Oh, I'm second guessing it. I'm just, you're comfortable. Everything else is lined up, your risk, and you want to be pulling the trigger, start the countdown. Because that just is one thing. And then you're forced to act when you hit the 1. And it removes any of this kind of thinking and it just forces that action. And I say, obviously, this is a trade that you wanted to take anyway, but you're just trying to eliminate hesitation. Just start the thing. 5, 4, 3, 2, 1, donk. And that just forces you to prepare yourself to pull the trigger. And it disrupts the hesitation flow because when there's a timer, you know you've got to do something at the end of that timer. When you're hesitating, you can keep hesitating by looking at something else before you know trade's gone, right? We've all done that at some point. You need to be decisive. And trading's about making a decision, a careful decision, but all the work should be done pre-market. The plan should be prepared, set up prepared. You're just now in the heat of the moment saying, what's the discretionary element of it? I'm going to wait for the close or I'm going to wait for this pin bar, whatever. Okay, now I'm ready to trade. And so you're trying to take a lot of the decisions out of the decision-making burden off you a little bit so that you can just force action and say, I need to take this trade. I'm trying to stop hesitating. This is going to force me to take action. And in that 5 seconds, by the way, you can go, this may well be a loser. I don't know and I don't care. This is not going to affect how I feel about trading. This is the setup. This is right. This is correct. This is part of my plan. There's no reason not to pull the trigger here. I must get better at this. Bang, pull the trigger. And he forces that commitment. Okay, let's talk about danger of overcorrecting after a loss. So, we can often take a loss and go, oh, well, I'm going to smash this thing. I'm going to size up and I'm going to make that money back, right? Kind of revenge trading. Or you go the other way and go, just be mindful, right? And this is why it's so important to disconnect yourself from your individual trades. It's irrelevant. It doesn't matter. If you can say, okay, listen, I have a propensity to be too hesitant after a loss. or I have a propensity to be super aggressive after a loss because I want to get that back quickly. Just be aware. A lot of this stuff comes down to self-awareness, accepting you are the way you are, not beating yourself up too much about it, but recognizing there's a fix. There's a way to improve it. And so if you become too hesitant, you go, that's fine. That's me, because that's me. I lose. I have a string of losers. That makes me more and more hesitant. And I have that spiral. I have that spiral. Okay, that's okay. Accept it. What's the solution? Let me solve 4x. I often say, as traders, we're entrepreneurial, right? You're trying to do this and solve a problem and be rewarded to solve that problem. And each of the on the stage, on the pathway, these little miniature problems. And so you say, yeah, I'm a hesitant trader. I hesitate. Okay, so fix it. Maybe implement that 5-second rule. Maybe do your own type of thing, but something that forces a commitment. Maybe you refine your plan a little bit. Maybe you kind of have a drill. I'll talk about drill in a moment. But you just don't want to overcorrect because you're already feeling the pain of the loss. And then you can end up doing more damage because you're oversizing, you're over aggressive, or you're hesitant, you missed a trail. Oh, I shouldn't have done that. And you're constantly trying to battling with stuff. Excuse me. Okay. So that's being very, very self-aware, and that's so important. You just don't want to, and it's a cycle again, right? If you had that one bad trade, it can just ruin and ruin and ruin and ruin your day, ruin your week, ruin your month, ruin your quarter, ruin your year. You don't need that. So just be self-aware, stick to your risk, and don't make on the fly adjustments to based on emotion. Easier said than done. I understand it. I know all this stuff is like, but we're trying to come up with the whole purpose of this there is not to say, stick to your rules, stick to your plan, pull the trigger. Yes, but how do we do that? What are some tactics we can do? 5-second rule, going through that trade checklist, those little things. And even if you don't deploy those and you go, well, I quite like that, but I want to make it my own, that's good. But a tactic, a way to overcome the challenge that you're facing now. Training's this. It's about identifying the biggest problem you have in front of you at the time. That problem varies with experience. It varies with so many variables. It could be I'm trying to trade more size. It could be I'm trying to stick to my plan. I'm trying to avoid range trading, avoid trading on tilt, avoid hesitation. I'm trying to add to trades, whatever. You're trying to not do something or do something. It's identifying what that biggest thing is and then working on it relentlessly. And when you've sorted it, you move to the next, and then the next, and then the next. And this journey never ends. But when you get good at doing that as a trader, you get good at number one, being self aware of who you are. Number two, being very good at identifying what the biggest problem is and not getting distracted by shiny objects. And I say shiny objects, that's perhaps not fair. But if you're kind of focused on running trades, adding to trades, perhaps more advanced stuff, but you can't stick to your strategy, it's a waste of time. So being very, very objective, looking yourself in the mirror and saying, what is my biggest challenge right now? Is it discipline? Is it hesitation? Am I just not? Okay, fine, fine. The first part of it is to say, it's this. If I solve this, the other things would be easier to trade. Okay, so I'm going to relentlessly pursue this over the next month. And it takes time. And there's a lot of people, traders do this. They're so focused on the P&L, what the next trade is doing. They know they've got this problem. They know they've got this. They make a good trade. They go, it's fine. And they're up and down, up and down, up and down. And they never make any real progress because those challenges and hurdles are still there. They just come up intermittently. Oh, hello, revenge trading. Oh, hello, FOMO. Oh, hello, hesitation. I've dealt with none of these and I'm not had them for a while and it's not helping me. So that's a really, I think, a valuable way to approach trading. Okay. So trust your edge even after a losing streak. Every strategy has winning and losing periods. That's just the way it is. You look at the best hedge fund managers, the best traders in the world, they've had periods where stuff just hasn't worked for them and they don't worry about it. They just keep moving forward. And you don't want to abandon a working system too early. I'm going to talk about this a lot next month because there's something when the regime shifts, how do you adjust and adapt your plan, your strategy? Should you throw the whole thing away? Should you shelve it? Should you mothball it? Should you tweak it, adapt it? It's a challenging game. There's no right or wrong answer, but I'm going to give you a few ways to kind of help you with that. But in this context, we want to think about sample size, like good old Scottish John when he's saying it does his 10 sample size, not emotionally thinking about trading. We want to judge the strategy success from a week, from 10 trades, from a month, from a quarter. then look at it and say, right, I'm not attaching my self-worth to this. I just want to review and audit like anything. You think about those of the successful startups and big businesses out there. They started out completely different businesses. Like YouTube wasn't video sharing. Groupon wasn't group Airbnb. They were completely different, and they just decided to solve for a problem and fix it. And it's the same with trading, right? You might start from one path and end up in a completely different area. That's fine. We need to balance this discipline and flexibility, right? You need to follow your plan, but not be rigid. Real deep dive on this next month at some point. When do you adapt versus staying disciplined, right? And you don't want to. And why I mentioned this today is that you really don't want to overthink stuff and say, "Oh, do I need to adapt on the fly? Do I this?" You create predefined rules that say, "Hey, in this market environment, I do widen my stop. I do reduce my risk. I do this." So it's all planned out so that you are still adapting to conditions, but you're not breaking rules. It's a complicated thing. And we'll go into it in more detail. But from a hesitation perspective, you want to remove anything that makes you second guess. Oh, should I trade more size on this? Should I have a what? I don't know. Remove it. Don't worry about it being right or wrong. Just run with that for a bit. I'm going to use 180 R stop. I'm going to do half. Just run with it for a bit, and then you adjust and adapt. And that way, you're not second guessing, you're not overthinking, you're not hesitating, you're just executing. Okay, confidence bank method. I know you might be thinking, Mark, this is a broken record. You always talk about this, but it's so, so important. Please just make those deposits. Every disciplined action you take, every trade that sets up that you see and you pull the trigger is a confidence deposit bank. Ka-chink in the piggy bank. Ka-chink in the piggy bank. Keep that bank frothy because you're going to withdraw it sometime, but you want to be able to make some withdrawals and it still be pretty chunky, right? And if you're hesitating, breaking a rule, you're just making withdrawals that you just don't want to, you just can't cash, basically. Okay, so the no overthinking trade checklist. Something to consider. I thought I'd add this for you to maybe give you some ideas. Before each trade, ask yourself, this trade for my playbook, am I following my risk management? Do I feel calm and in control? Have I checked my confidence levels today? It's a very simple thing, just like the others, but this is just double checking the main things are in place. Is it a trade I would normally take? No, fine. I might think it's going up, but if it's not setting up, I'm not going to take it. It's a risk. Where's the risk? Where's the risk? Where's the risk? Am I calm? Am I relaxed? Am I sweating about something? And how's my confidence? Is it low? Then maybe I need to not trade today and kind of motivate myself and get comfortable with taking risk again. So how to recover from hesitation and rebuild trust in yourself. So if you do hesitate, and you will, and that's fine. It's not an instant fix. I appreciate that. There's never going to be an instant fix. Identify why you hesitated. Is it because you're overthinking and looking at different variables to make the decision? Is it because you're worried about the loss, the previous performance? Is it because you're worried about this one being a loser? What is it? Because if you can identify what caused it, you can fix it. Step 2, reduce the complexity. Take the indicators out, simpler strategies. You can always put them back on. A lot of traders push back on me with this. I say, just strip back your chart. Keep it simple. One chart, one market, one setup. Just keep it simple. And oh yeah, but you don't have to stay there. We're just trying to fix this problem. You can add stuff in later. You probably find that you won't, but just going back to basics and going, I'm just going to trade the ORB on DAX. I'm just going to trade the afternoon breakout on high beta stocks. I'm just going to trade the Asian range breakout on USD JPY. Just build these little wins. And that's by say step 3 is like, just execute 5 perfect trades just to build confidence and build momentum. And this might not be a strategy you think is effective. It doesn't matter. You're trying to solve a different problem. You're not trying to solve for P&L now. You're trying to solve for hesitation or rule breaking. The different it requires a different prescription. It requires a different approach. You can postpone that P&L solving for another time. But you can't get to that until you solve this. So you reduce the complexity, you identify why you hesitate, you make it simple, and you say, right, if this does this, then we do it. Something I've said to our trader before is the coin toss, right? Even going back to super basics and going, you start at a time of day, a bell goes off, 10 o'clock, you toss a coin, heads you go long, tails you go short, use a fixed 20 pip stop, right? It's stupid. It makes no sense. It's not going to be profitable. But you might be, of course, you don't know if it's profitable or not. You might do 10 of them. It works. The law of luck plays on your side, but it's obviously not a sustainable, profitable strategy. It's completely random. But the point is, you're building momentum and saying, my rule is this. If it's heads, I go long. If it's tails, I go short. and you're trying to get used to execution. I don't recommend necessarily doing that extreme. Have a strategy that you believe has efficacy, better. But if you reduce the complexity, it's easier to get those 5 perfect trades in a row, to build confidence, to build momentum, to say, I don't need to hesitate. Look, I saw this, X equals, well, X equals Y. No, it doesn't. X plus Y equals yes, or whatever. You get the point. And if you can do that, you can then add more layers of complexity if you wish later. You don't have to end up being the simplistic trader who just pulls the trigger at 10 o'clock if the candle's green or whatever it might be, right? You might find that actually you do want to be like that and be a little bit more complex, but just reducing the complexity so that you can make the decision with clarity and you know that you should be trading or not. It's as simple. It's not, it's a gray area. Yeah, but it did this. And sometimes I like taking the wick, but sometimes I wait for the flush. Sometimes I wait for the higher low. Sometimes I wait for the break. No. Make it clear so you can get those trades and just focus on dung, 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 dung. And that builds confidence. Then you can layer in some more complexity if you wish. Think about one trade at a time. You don't want to be overthinking stuff. Think long term. Where's the trader you're trying to be? How do they trade? How does he trade? How does she trade? How does he look? How does he execute? Is he worried about the outcome of individual trade? Of course he's not. You can care less, right? And that's who you need to emulate, who you're trying to become. And thinking long term of this trade is one of 1,000. I don't need to give it this much weight and impact on my emotions. Who cares? I will never, ever, ever, ever remember this trade in a year's time, unless I let it do damage, of course, which you should never do. Of course, you should not trade until, of course, you should manage risk, but assume you stick to the plan and stick to the risk rules. You will never remember this trade. And how great if it turns out to be a monster, maybe you remember it for a good reason, fine, but it's not going to be a trade you ever think about. It's one of thousands of trades you take. And as Douglas said, you just have to just repeat. So something to think about is, what's your biggest confidence challenge? What's the thing that's really holding you back in trading? Talk a lot about diagnosis. A lot of trading is about self-diagnosis. Unless you've got obviously someone, we're working with someone or you're at a firm or whatever, you have to do this yourself. You have to say, what is my biggest challenge? Why do I hesitate? Why is my confidence low? And take some time to do that. Too many traders get bogged down in the execution, bogged down in trying to make money in the next trade, but actually just taking a pause and going, well, what is it? What is my problem here? What am I doing? And then coming up with a solution, which is going to take some time. It's going to take a few weeks, a few months, and that's okay. It's not going to be instant fix. Oh, you know what? I do my 5-2-1 and that'll fix things. No. Accept that it takes time, but understanding what the diagnosis first and then making the prescription. So some key takeaways, I think, from today, before we go to Q&A, be mindful that self-doubt builds over time, but you can break that cycle. Just understand that you break the cycle, things get better. Decision framework that makes trade execution easier. So you just want that done. It's part of my plans, my risk management, whatever it is to you. 5-second rule to help you make not an impulsive decision. That's not what it's helping you do. It's helping you make a correct decision instantly. It's not second guessing stuff. And you think you're a driver, right? I'm pretty sure most people here drive. You're at a junction, a busy junction. What's the last thing you want to do? The last thing you want to do is half pull out because you're right in the danger zone and you're stuffed. You need to wait for a gap. And when you see a gap, you commit. Bang, throttle down. You're in that gap. You need to get out quickly when you make the decision. Now, you need to be prudent. You're not trying to get in a stupid little gap. So you're not trying to be smart about things. You wait until there's a safe gap. But when you see it, if it's busy, you're on the throttle, man. You have to be on the throttle to get in that gap. The worst thing you can do is throttle on, brake on, throttle on, brake on. And occasionally you see drivers do that. They're out in the junction, they're stopping. You're like, oh my God, it's just creating chaos for everyone. It's a danger zone. So think about things in life where you take a decision, you go, done, I'm doing that. And trading should be the same. As long as it fits in with your parameters, you go, yeah, I'm making a decision. Now, hopefully, it's a bad analogy to a certain extent, because hopefully you're not going to make bad decisions when you're pulling out and go, oh, I crashed on this one. Who cares? No. No. Trading slightly differently from that, but you get the point. Last trade shouldn't impact the next. Confidence does come from the consistent, disciplined execution. Remember that. And that's why I say sometimes peel back the strategy and setup and playbook you've got to some very simplistic rules so that you can just execute and develop the confidence that comes from executing without hesitation. A very simple rule, like the opening range breakout, like any of those things that you mentioned, and use any of them, but they're very strict. And the idea there is you're building the confidence in the bank deposit. You're not hesitating because all you have to do is wait for the close of a bar or wait for the break of a level. It's very clear. Here it is. Dink. Here it is. Dink. Here it is. Dink. And that starts to reinforce and hardwire the brain to say, hey, this guy wants me to execute when I see the plan unfold. When I see this, he wants me to pull the trigger. I've done this now. Okay, now when it's my strategy and there's a little bit more complexity to it, I know what he wants me to do. I'm going to do it. And that's a really good way of kind of reducing hesitation. Will it eliminate it? Hopefully it will, right? At some point it will. I think hesitation is one of the things that actually probably won't get you in the future. Mistakes, they happen. All the other stuff maybe creep in now and then. And maybe you do hesitate, but it's kind of such a meaningless thing at some point in your career that you go, yeah, you know what? It's not worth bothering, putting attention to. I've got bigger fish to fry. But if it's bothering you now, then absolutely put attention to it. So some idea and action plan maybe you could do tomorrow. Identify your top self-doubt trigger. Why do you not pull the trigger? Use that decision framework for every trade. Plan, blah, blah. Set a confidence target for the next 5 trades. In other words, I want to just execute 5 trades flawlessly and I'll feel good about it. Flood yourself with confidence and all that other stuff. Review your trades based on execution, not just P&L. Listen, I get P&L is important. That's why we're trading. I understand it. But if you can, especially if you're a developing trader, not focus on it so much, it will serve you. It will absolutely serve you. I'd rather you don't look at it at all. If I'm honest, you know what your risk is. It just ends up adding so much pressure to the trade when you're developing it, and the expectation is there. It's not a good place to be. Whereas if you review your performance and you attach your confidence to, I'm sticking to the plan, I'm not overruling trades, I'm not hesitating, all the stuff you're trying to do, that builds confidence. And the little voice will go, yeah, but your P&L's not da da da. I'll deal with that at some point. I'm trading small. I'm learning the craft. I'm learning. I'm developing a system and a methodology that's going to serve me for a long time. Fine. The P&L might not be where I want it to be, but I'm doing this step and that step and building my confidence and knowing I need to have all these in place before the P&L catches up. Oh, by the way, as we wrap up and let's go to some, have I muted myself? No, it says I'm muted. That's not true. I know you can hear me, can't you? That would be funny. No one said anything, so I'm assuming I'm not muted. That's pretty sure true. Just give you a shout. You can hear my voice, guys. Yeah, fine. I've got a thing here. I promise you, it says you are muted, but I know I'm not. Thank you, gentlemen and ladies, for that. For a moment, I thought I'd been talking about and getting all fired up about stuff. We've almost finished anyway, so those of you who haven't downloaded it yet, you're welcome to download my discipline tracker. That's for Google Sheets. It's completely free and it helps you kind of gain momentum. So if you're trying to not hesitate, you can put in daily habit of just execute these trades, check my checklist, stick to my plan, and then you run through the month and you try and get a goal. So I want to do 10 times this month, and then next month you do 11, next month you try and do 15. And just kind of gamifies the process of improving as a trader. You go to my website, and then at the top there, discipline tracker, and you can download that and you can just copy it to your Google account. Okay, so finally, let me just tell you what we're doing next month. You will probably have to register again because it's kind of going to be compacted into another theme. So we're going to talk about the trader's playbook. So refining, finding, and executing your edge. First webinar will be finding your trading method, how to identify what works for you. So we're having a strategy that's decent, but if it doesn't fit your personality, it's pointless. I'm going to dig into that one. Then on Monday the 10th, so not Tuesday, Monday the 10th, how to filter out market noise, focus on the high probability setups. And the Tuesday the 18th, the discipline dilemma, talked about this one, deep dive into that, sticking to your plan without becoming rigid and being absolutely shackled by rules, which is horrible. And the last one of the series for March will be adapting to market regime shifts. Important, especially the current environment, how to stay flexible without losing your edge. You keep it on your inbox. Pepperstone will email you. I will email you. You can register for that. You're very welcome, as always, to attend. And these are no longer on YouTube. If you would like the recording, then you have to register. It's great to join me live. I do enjoy the energy when I see other traders here and I get some questions. It's nice. I'm not just talking to a screen. But if you can't make it, I appreciate everyone's busy. Stuff's going on. The recording there for you. So best option is to come live. Second best to get the recording. Okay. I will stay for P&L. P&L in mind. I'll stay for Q&A. I understand now that I've gone over, and if you have to go, you have to go. I'm not going to, not a problem, but I will try and answer as many questions as I possibly can because I want to help you out. And like I say, if I can, I will. If I can't, I will direct you to someone who can. So I'm looking at my other screen here. Okay. Okay, run through these as quick as I can. If it's something, okay, let's get going, Mark. Just get going. So Zach says, I'm in the middle of a gym session. Had to jump on this though. Zach, appreciate that, buddy. Hopefully not mid bench press. You didn't get squashed. I had a leg session the other day. I don't know if you've got a hack squat machine. We've got a hack squat machine. That is a brutal machine. It is brutal because you're going right down to the bump stops. Anyway, yeah. Dirk says, how do you read candle graphs? Every time I try to understand, I get myself confused. Dirk, it sounds like you are maybe a newer trader. I would recommend, what would I recommend for that? Do you know, okay, here's what I recommend for a newer, and not just for you, Dirk, but, oh, another follow-up question. I want to try day trading so bad, but I'm terrified. It's not like I have a cushion of money to completely lose what I put in. Dirk, go and demo, pal. Do not risk money. You don't need to. We're beautiful position here where you can just learn for free. Go on a demo account, just start to watch the market, start to put a daily chart up, a 15-minute chart up, and see what the candlesticks do. And say, hey, I'm going to write some observations down, maybe read some books, and don't be any rush. And just start to think about a strategy, start to read about different strategies, opening range breakout, any strategy, and just observe and write stuff down and just trade on demo until you're comfortable. There's no rush, man. And if you feel, by the way, honestly, if you feel nervous about stuff and terrified, it's a surefire way of losing money. I'm being just blunt, and I'm doing this for coming from the right place here, pal. I could say, yeah, don't worry about it, Dirk. But if you have a fear of losing, then you probably will lose. You want to just get comfortable with trading, comfortable with candles, comfortable with all the stuff before you even consider about risking a penny. And then when you're ready, you're comfortable. Very, very small amount to get some skin in the game and understand the psychology that comes when you're attaching money to the decision. Okay. So Zach says, furthermore, in terms of limiting beliefs, doubt, I always feel I never have a true reflection of my trading edge stats. It's so silly because I for certain have edge. I think it's just scar tissue from years of unprofitability that when the profitability does arrive, it feels like, oh, I wonder when the next losses will be that will cause that boom and bust. Yeah, do you know what? If you believe you've got edge, spend some time outside of trading saying to yourself, do you know what? I've got edge. Visualize yourself trading. Visualize the trader you want to become. I'm not going to go deep into this. I've done this before. But really reinforce that. It's a tough game, man. And every time you've got outside of the market, go, you know what? I performed well today. I stuck to my plan. I need to believe it. If I don't have the belief, I'm always going to be holding myself back like an anchor. I'm always going to be just holding things back. So, really think about generating that belief in yourself, looking at the strategy, looking at the edge and saying, yeah, I have got it. If I don't push now, when am I ever going to push? When am I ever going to trade? I'm doing this for a reason. Well, I'm going to second guess myself all the time. And sometimes building that belief does take time. And obviously, you've had times before where things haven't gone your way and you've had drawdown, you've had things, just you haven't got the P&L to get confidence. It's tough, but you never break out the cycle unless you generate that self-belief. A trader balances himself between confidence and cocky. You dance that line. And that's just being frank. You kind of have to think you're a great trader. You have to believe you're a great trader. You have to believe you've got it in you if you haven't got it now. But you can't be cocky because the market will go ching, 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 slap you around the face. And you can't be the other way. You've got no confidence because you never execute, never put any risk capital up. So it is dancing that line. And I know it's difficult to find that line. But if you're on the side of low confidence, you've got to shove yourself towards the middle if you can. And that sometimes comes from that self-talk and belief. And maybe some stuff outside of trading, build your belief. There's loads of resources, mindset stuff out there. Even Tony Robbins, Ed Milet, these guys you talk a lot about mindset and believe in it. It's important. It really is important. So yeah, enough of that. Dirk says, any US-based ETFs that us being in Europe can invest in? Where can I find a list spreadsheet of EU-based ETFs that mirror US ETFs? Sorry, Dirk, I don't know that answer. That's not really my bag. I'm sure Google could help you out with that. I'm sure it sounds like a cop out answer, but it probably will be able to help you out better than I can with that. I assume you want them to wrapped in an ISA or something as well, or even asking AI. Ask ChatGPT is probably useful. Um, do you ever crack the nut? This is in relation to trading or the challenge, I guess. Or is there always seriously hard challenges that pop up? You know what, Zach? You do. You get to a point where things become easier. You become more comfortable with your methodology. You recognize your strengths and your weaknesses, and you're okay with that. Does the challenge when we enjoy the challenge, right? I enjoy the three-dimensional, four-dimensional puzzle of trading of like, where's it going to go? I don't know. I set up my style, my strategy, I want to scale. There's always stuff to do, but things do get easier. Like the over trading, if you can get rid of that, hesitation, you get rid of that. Those kind of real basic foundational things, because they cause the most angst, right? And they cause the most frustration. And like, why can't I just stick to the damn rules, man? Once you get over those, the other stuff becomes more fun. It's kind of fun stuff. Scaling up's a fun problem to have. You sit there and go, like, I want to scale this up. That's a more of a fun challenge. So there's always challenges along the road, and there's always going to be drawdown or stagnation and things you want to try and do in trading. But a point where you get past the horrible mistakes that just impact you really negatively, it becomes a little bit more relaxing. And you see that, I kind of see that breakthrough with traders. They're more relaxed about trading. They talk less anxiety. They're not as anxious about the way they talk about trading. Very, very useful, very nice place to be. Relaxed, shoulders drop, not caring about individual trade. It's so tense at the beginning. There's so much anxiety, frustration, anger, regret, and it's gripping it so hard. But when you get past that hump, so to speak, the challenges never go away. But you've dealt with that before. I've dealt with drawdown. I've dealt with stagnation. I've dealt with overtrading. I've dealt with this, that, the other. And you know that you have the ability and the skill set to overcome the next obstacle. And that's a better place to be. Barry Ward says, "Hi, Mark. I'm currently doing the 40 trade challenge to gain confidence in the strategy. This is, by the way, you do 40 trades, you execute them. Ding, 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 ding. The 5 trades I said they do 40. Log the results. You don't deviate, and you try to get that. At first, I thought I could optimize the trades and look for common features in winners and losers to help. Now I feel though maybe I'm trying to perfect something that will never be perfect. Any way to do one without the other, or was it just being aware of the issue?" Good question, Barry. Very good question. And obviously, I know you, Barry. Yeah, I think if you can do the 40 trades, you might not have enough evidence there to say there isn't a feature in there. It's a little bit mixed. In which case you go, is the strategy the right strategy for me? Have I got a big enough sample size? Do I need a little bit more? And sometimes you review it and go, there isn't really a theme that runs through. Maybe I need some more trades. And so you mentioned something there was very important. Trading is never going to be perfect. And we have to accept that. We're never going to get the high and the low every day. We might get it sometimes, and that's part of the game. But it's an imperfect business. But the good news is it doesn't have to be perfect. You're going to have a little bit of an edge, and that edge can compound over time. You could trade more size on that edge. There's ways to make that edge meaningful. It doesn't have to be huge. And so, to a certain extent, Barry, what you say there is like, you know what? Maybe I don't need to optimize it. Is it profitable? If it's not, is it because I've not got big enough sample sizes? Does the strategy need more size? In which case, do I need to be doing? There's things to consider. But if it is and it looks like it's working, you go, well, I'll just do more of what's working. The challenge I think a lot of traders have is they look at the absolute P&L and go, it's not worth it. I've made such a small amount, it's not worth it. But don't forget, you can solve for size later. I said about scaling up, or not necessarily scaling up, the stepstones of trading. You might be profitable for a quarter and the absolute number might be like, well, it's hardly anything. But then you go, okay, well, actually, the equity curve's okay. The absolute number's not a lot, but let me solve for that now. How do I make more from what's working? Do I do a blanket size increase? Do I do add to trades? That's a separate problem to solve. The first problem to solve is solving for profitability. Okay, let me run through this. Zach says, I have a strange dilemma. I wonder if you can advise. I work from 9 to 5 for the Environment Agency. However, once a week they're required to come to the office, usually a Wednesday. It means I miss my training session. This miss of the day just frustrates me, especially with all the progress I'm making. I skip these going into the office days to trade instead of, so my manager isn't too keen on that. But it's nothing too serious. He'll have a few words. What are your thoughts on it? Do I go in? Zach, do you know, This is a big challenge for many people who have a job. You have to be at peace with it. You have to say this job is serving me at the moment because it's providing me with resources to be able to trade. Without it, I would be under a lot of pressure to trade, and it would put me in a very difficult position. So, as much as I would prefer to be in front of the screens, you have to frame it in that way as a positive and say, "Hey, do you know what? I might miss something, but ultimately it's a small price to pay because actually I get to trade the other days of the week anyway." And being at peace with that, you're being comfortable with that, you have to life's you can't just put your life on hold. And the same when if you're fortunate to be able to trade full time, you still don't want to sit in front of the screens. If I go off to the gym and I say, okay, well, I'm going to come back at the US for the US Open, do my prep and stuff. If something kicks off, then it kicks off. Like I go to the gym. If it kicks off when I'm in the middle of the gym session, then so be it. I can't overthink that. And so it's the same for you. I know it's a little bit more frustrating because it's bleeding into the whole day, but try and frame it in a positive way, and that'll help you. Um, Gary says, great presentation as always. Appreciate you, Gary. Idea for future webinar: how to handle if a trade presents contradictory factors, i.e., both reasons for and against the trade. That's a good one, Gary. Yeah, that is a good one. Note it down. Appreciate it. Grant says, appreciate the webinar. Thank you, Grant. Who are the authors you mentioned in addition to Mark Douglas? Steve Ward and who did I say? Brett Steenbarger. Is he up there behind me? I'm looking at my. He's not there. Is he there? Maybe he's in my other. Brett Steenbarger, anyway. He makes great book. Daily Trading Coach is one of them. How to get recording, as Joseph says. Oh, few people say that. Pepperstone will send you recordings. If they don't, please email them. They'll sort it out. They are dealing with that. Zach says, you've just saved Dirk so much pain. Yeah, Zach, it's not a popular thing to say, but it's the real world. Like, honestly, Dirk, mate, I'd rather you not trade at all if it's going to sting you. I really would. You don't need the pressure. It's tough. It's tough enough as it is. And that's just being real about it. Oscar says, what main issues to get out of break-even situation on real trading? Identify where you are, what the biggest challenge, what the biggest losers are, what the biggest winners are. Try and find a commonality. Just like Barry was saying, look at your trading top 10 trades, top bottom worst trades, and go, what is there a commonality between the bottom trades I can reduce? Yes, I'm over trading, or yes, I'm doing that. Okay, focus on that. Because if you halve those losers, that would take you to profitability. And then you look at your winners and go, what can I do more of that's working? What are the setup, what are the strategies, what the market regime is, and try and work on that. And that double-ended attack by chopping off the worst losers in half or even 20% and adding more winners will tip you over to the edge. Reese says, what other authors or resources do you recommend for trading psychology and staying dialed in? If you've subscribed to my daily email, I send an email out every day, and that's a really real psychology theme. And you talk about strategy, and I talk about other traders and stuff like that as well, anything that's valuable to trading. But I do have an angle of psychology and stuff. But I'm not a trading psychologist. I'm a trader who is in the trenches, who understands psychology. Louise Non-Wheeler, great trading psychologist. Her website's Hypnosis for Traders. She goes into real deep dives about stuff. She's got loads of free resources and visualization and meditations and stuff if that floats your boat. Brett Steenbarger, great books. He has also got a YouTube channel, I believe. Steve Ward, fantastic guy. I got a podcast episode, two of them actually. He did become a bulletproof trader. So those are good ones to kind of start with. Mark Douglas, of course. Judge says, really great series. Thank you. Appreciate that, pal. I often hesitate, miss the move I planned, and then subsequently get triggered and then take a trade outside of my rules. Terrible cycle. This will definitely help. Good. Yeah. Hope it will, Judge. Work on it relentlessly, and you'll crack it. Beth says, thanks so much for a great webinar, Mark. Hi, Beth. It was very helpful. Beth, I know you remember, Traders Mastermind, very welcome here. Zach says, your advice is great. Thanks, Mark. You're a legend. Not sure about that, but I appreciate your not kind words, Zach. George says, I used to make money until I faced a huge loss. From that day, I've been afraid of the markets. Most of my setups win. Watching buy, no execution. How can I fix this? George, forget about the loss. Scale the size right down. Get yourself back on the horse. And you're worried about losing money. Understandably, it's your self-preservation mechanism kicking in. You had a huge loss. It hurt. It stung. You probably cried over it, whatever. You're a human being. Okay, dial down the size, get your momentum, get your confidence, get your strategy dialed in. Slowly, 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 man. It's too easy, pal. Honestly, it's so easy to just think, I'll just get back on. If I make a winning trade, I'll get that money back and I'll feel great. And you will temporarily, and you could. But the amount of traders I've seen who've done that kind of, oh, bang, I made a massive loss. And then they kind of make a worse loss and a worse loss and they wipe out the whole thing. It's like, whoa, 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 whoa. I've made big damage. This is it's a mortal wound potentially. So I need to relax, refresh, small size, build your confidence back up, prove you can put a profitable month in on small size, increase it, and just accept that loss ain't coming back in quick succession or quickly, let's just say, and be okay with that. Say, but yeah, but I will recover from that loss and I will be a way better trader for it. I will be a trader that can look back when I take a drawdown or a stagnation again and went, I recovered that brutal drawdown and I did it the hard way. Did it the right way. I stuck to my plan and I grounded it out and I damn well did it. That will give you something that money can't buy, man. It will be such a powerful confidence boost for you. So that would be my thoughts on that. My edge is actually seriously good. I can't get my head around how to accept how good it has been over 3 years of refining. So what are you waiting for, pal? Just trade it. Accept, do slowly if you need to, but you've got something there. You know the edge is good. You believe in the edge. You've got the confidence. Sit down and sit in a chair, nothing else, no distractions, get rid of the phone, get rid of the markets, and think about why you're not executing. What are you afraid of? There's something there that's stopping you from pulling that trigger. And if you can work that out, you can deal with it. And sometimes it's a case of looking yourself in the mirror and go, what the am I waiting for? I've got an edge that works. This is way better than I ever would have expected when I started trading. What am I doing? I need to trade. I'm here to trade. So what am I doing? I don't know where you are in that, and I don't want to be too harsh on you, but you find, is it compression or compassion you need? Do you need a kick to just get it done? Or do you need a little bit of peace and calm and just to reflect and go, what is causing it? And it's that compression, compassion kind of balance that we need to find as a trader, as a human being, right? Grant says, thanks for daily emails, always helpful. Cheers for the feedback, Grant. I like that. Okay. I've got to run through these quickly. I don't mind staying. I appreciate I've overrun quite a bit. Good evening. Good evening. Hello. 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 These are just comments, I think. Okay. Question here. If I learn a lot from these webinars. Appreciate that, pal. I can only join these webinars when a friend shares the meeting links with me. How can I register for them in order to get the Zoom links sent to my email? Pepperstone.com, or if you register for my daily email list, I send a webinar invite out for this. I need to come up with a proper strategy. Yes, good day. Is educational important? Where can I see the previous webinars? Pepperstone will send those to you. I'm scanning through the questions, guys. Thanks for your feedback. Thanks for your support. I really do appreciate it, honestly. I really do appreciate it. Try and put as much as I can into these webinars, and it's nice to know that you're getting something out of it. If it improves your trading, damn, that's exactly what I want to do. I really want to, have you come and say, you know what, I execute that, I did that, and it worked for me. I'm a little bit better, a little bit better, a little bit better. That's such a good thing for me to hear. So very well doing, being a trader and trading for 20 plus years and fine, but get a few people over the line is a really good thing. Thank you again for sharing all of this. I missed one. As I continue to work through some of my gaps, I've identified hesitation in not holding a trade to target. Often triggered by emotion from previous trade. Which of the ideas provided today would ever work best to start on? Different thing, Jason. Different thing, right? If you're not holding a trade to target, and you say it's hesitation, walk away, get away from the screen, or get a timer, right? We go, I'm going to hold this thing for another 5 minutes, another 5 minutes, another 5 minutes, another 5 minutes, and try to do that. And actually look at your P&L, what it would be if you had held the trade. That helps a lot. I appreciate your feedback as well. You've attended all the webinars so far, and each one has had a big impact on me and have helped me work through some of the areas of weakness. I'm really pleased to hear it, pal. Well done, Jason. People say they can hear me. You're not muted. Thank goodness. Thank goodness. Thanks. Peace out. See you later. Hi, Mark. Great info as always. Appreciate that, Toby. Trading reflects your day-to-day life. Any tips to correcting self-doubt in other areas of life so I can reflect on the market? Toby, what a great question. I'm noting that down because I know I haven't got much time here, so I'll be as quick as I can, but I talk about this a lot. You absolutely have to have high standards in your life, and this is my approach on stuff. Take it for what it's worth. I think you have to have high standards in life, which will come into your trading. You have to be disciplined in life, which I think comes into your trading. So I'm an advocate for things like cold plunge, cold showers, things that are difficult. Do what you say you're going to do. That will really help your trading. You try and keep your health on point. Try and do stuff and live to high standards so that when you're trading, you go, you know what, my standards are high. Well, I do wait for the right setup. I'm not risking my capital until I see what I want to see. Why would I? I've got high standards. And so that stuff I think is important. Um, so yeah, just start upskilling yourself everywhere. That was great. Thank you, thank you, thank you, thank you. Appreciate this. Charles has been a full-time trader for almost 8 years now. The journey has been full of ups and downs. Yeah, I try my best to get out of paralysis, but for the last 2 years, when setbacks came in, it looks like everything has failed for me. Could it be that paralysis entered into my subconscious mind, and it's going to be harder for me to regain myself? Could there be a way to get out of this quick? Yes, there is a way to get out of it, Charles. Quick. Get rid of that thought, man. It might be quick, but if you think, what's the quick fix? What's the quick fix? What's the quick fix? That's what's probably holding you back. You've got 8 years experience. You're an experienced man. You know what it takes to get to where you've got to. Go back to the periods where you were doing well. Look at it. Reflect on it. Look at your journal. Look at your P&L. Look at your blotter. What was I doing? How was I thinking? Have I recovered from drawdown before? What is the big thing that's challenging me at the moment? Right. And if you can scrap the idea of doing things quickly, it might happen quickly, and it's great if it does. But if you can relieve the burden of speed from your approach, and you reflect and say, it takes what it takes as long as it takes. That's also true for any trader trying to get to a decent level. It takes as long as it takes. But you've probably got enough experience to go back and draw on that, and also be honest and self-reflective enough and self-aware enough to say, where is the issue with my trading? Is my strategy suck? Have I just got a strategy that's no longer effective? Or am I overthinking things? Am I hesitating? Am I FOMO? And really being diagnostic, getting your diagnostic out, auditing the problem, and then coming up with a solution. I know it probably requires a deeper answer than that, but hopefully that's helped, Charles. Theo says, yeah, Theo, how you doing, pal? This webinar was made for me. It was Theo. And I was thinking of you when I wrote the slides, pal. I was thinking of you. I was thinking, this is Theo. Hopefully helps them. You've done a lot of good work. I know you have. I've overcome these issues by simply asking myself if the setup matches my criteria or not. No maybes, no ifs and buts, yes or no. It's fixed the issue as I would negotiate with myself previously. Thanks, Mark. Theo, great. Good to hear it. There's a little bit of Peter in there, isn't there? No ifs or buts. So yeah, clear cut. There's no room for ambiguity. That helps hesitation. Do I take it or do I not? Not second guessing, not adding other layers of variables in it. It's either above this price level or above this candle, or it's this time or it's not. And that's it. And then Theo's just done. And then you just get used to doing it. Okay, so a few more. Okay, Mark, for over a year now, I've been spending my entire day in front of the screen, 8 a.m. until the market closes at 9 p.m. Mac, that's hardcore of you. I did that a lot in my 20s. I would be there from the DAX open to the US close, but I didn't care. Less so now. Less is more. Anyway, by the way, I've been constantly watching candles, learning, searching for patterns, and observing price behavior. For the first year, I was a break-even trader, not moving forward or backward. Okay. In the past few months, I've started making decent profits, understanding price action, momentum, institutional candles, and more. I feel like I'm beginning to breathe with the market, and around 85% of my trades are profitable. I don't want to lose this progress, and I want to keep going. But do you think spending so much time on the markets is too much? Could this be over trading? I usually take around 10 trades a day. Thanks, Mac. Yeah, I think you're probably at a stage now where you can allow yourself a little bit less screen time. And honestly, I don't think you'll regret it. Now, you need to adjust that from an operational perspective around the trades that you take. I don't know if you're more DAX trading or you're more a US markets trader or what you trade, but obviously align that screen time with when you get the most plays. But I think I absolutely believe that time away from the screen, taking walks, doing the gym, doing something different helps your mind process your trading, helps you think clearer. The amount of times I've been sitting in a sauna or a steam room after a workout and I've thought of something trading related, thought, oh, you know what? Yeah, and it just something about that doing something different and re-clearing. And a lot of guys meditate. I never really got to grips with that. Whatever. I think it's very, very important for you to step away from the screen. Now, you don't want to be a screen slave either. You don't want to be a screen slave. It might be difficult at first, but I think that yeah, that's that. Was that a question you asked me? 10 trades a day, maybe over trading. I don't know what your edge is, Mac. If it's working, listen. I always say this: if it's whatever, if you someone says to me, I'm making money and I'm making profits, my thing is don't touch it. If it's working, just push harder. Like just push harder. If you think there's a chink in the armor, or you feel like you're walking through a field of landmines, i.e., profitable, one day I could step on one, then fine, adjust it. But if something's working, you just keep your foot on the throttle because, dude, times change. So I'm always, I never here to tell another man how to trade. If you were telling me it's not working, I'd be like, okay, scale things back, maybe take fewer trades, but things are working for you. So, mate, you carry on. Please send the recording to my email. You'll have to email Pepperstone, pal. Sorry, I don't have access to recording. Eric says I'm developing a script using TradingView's Pine script to automate trading. This way, all trades are executed according to my rules. Yeah, I think that's a great idea. He says, what's your opinion on this? If you would do that, that's great. If you want to be a fully automated trader, rule-based trader, fine. I think there's more personal opinion. The algo guys out there will disagree with me. That's okay. It's cool. I think there's a place for both. I think that the best edge comes from rule-based system with a discretionary sprinkle. That's the recipe. Build an algo, fine. You can maybe do a bit of both, but understand why you're doing it. But don't forget, you don't eliminate trading psychology still, because you have your equity curve. And even though it's automated, you're still trading your equity curve by going, oh, I need to pull out the system. It's in drawdown, just like you would do if you were long a market. Junaid says, fantastic webinar. I appreciate that. Okay, I'm going to run through these because I know I've been 30 minutes over, and there's how many people we've got left in here. Okay, a lot of people dropped off. I understand. Brilliant reminder of confidence building. Okay, I'm going to run to the question here. Thank you for the feedback. Do you find that you should become more experienced? The quantity of trades taken a day went down? Absolutely, mate. Absolutely. How many do I take in a day? Not a day. Maybe I take 3 a week. Maybe I take 1 a week. Maybe I take 1 a month. Like it doesn't matter. It's like depends on the market conditions. A bit more active now. I've been a bit more active the past few days just because of the nature of the beast. But in January, when we're kind of flicking around on stuff, a handful of trades, it wouldn't be unusual for me to go a whole month without a trade. I'm fine with that. Or I might be a bit more active like I have been the last few days because there's opportunities setting up. I think there's edge there. So I don't think, yeah, I think less is more. Absolutely helps you calm, helps you think a little bit more about what your edge is, how you trade, what your style is. But I think that the path for most traders is as they increase experience, the volume of trades goes down because you just become more picky. And you go, if I'm going to risk this amount of money on a trade, I don't want to take substandard trades. I don't think there's that many good trades in this that there are setting up. And when they do, I want to be on them. And that might be me more active, but it also means being much more defensive when things aren't setting up. And you're happy to do that. You have to say, you know what, I'm not concerned. The market, let the market resolve itself. Once it resolves itself, like we have, perfect example the last month or so, didn't resolve itself. Now it's resolved itself. There's a bit more action, a bit more spice going on. Okay. Uh, Dirk says, I've been the last 2 webinars mentioned. The first one that I could not download. I'm trying again. Please email Pepperstone, Dirk. Sorry, mate. I don't have access to recordings. If you email Pepperstone support at Pepperstone or anyone who the Pepperstone registration, they will help you. They will help you. And if they don't help you, they will help you. I know they will. But if for some reason it don't, email support at tradersmastermind.com and I'll make sure that you are sorted out. Okay, final 2 questions and then we are done. So, hi Mark, I've got a beginner question. Should I start with a prop firm or use my own money for trading? I've tested my strategy for 1 to 5 months, 1.5 months, and made some adjustments. Is now a good risk management and a strong win rate. By the way, taking cold showers because of your podcast. I hear your voice more often than my colleagues daily. I think that's a good thing, William. You're like my little voice in my head when I do my testing and tell me to never go up. Well, I'm pleased to hear it, mate. If it's helping you move forward, then that's a good thing. Toby says, thanks, Mark. Okay, so did I ask that question? Should I use a prop firm, use my money? That's a bigger question. Let me shelve that, William. let me shelve that for another time because that's a big question. Okay. Anyway, let's call it a day there. Thank you, ladies and gents, so much for your questions, your attention. I hope this has been valuable for you. Don't forget, we've got this series coming up next month, the Trader's Playbook, and I think we're going to get a lot of value from that. Good luck in the markets. Keep your risk managed, and I shall see you next time. Take care, guys. Bye-bye. Thank you so much.